Hi everyone, and welcome to our 9th webinar in our 10 webinar free educational series for the year, Bookkeeping Fundamentals and More for 2020 Vision. Our presenter today, Sarah, needs no introduction. She's our guru and from Trinity Bookkeeping Services, and she's just a wealth of knowledge, and I'm so privileged to have her impart her knowledge with us. Today's webinar will be on how to use management reports to see how you're doing, how your business is doing, but also how these management reports apply to Jobkeeper, which is so important at the moment. So Sarah, welcome. Looking forward.
Thanks, Joe. I'm really looking forward to it as well. 9 webinars, one more to go in November, and then that will be the end of 2020. And, when we started this, we thought 2020 vision is usually very clear, but unfortunately, it's been the most clouded vision that we've had in this year, hasn't it?
It's just been a mad year. Like nothing has been as predicted. There's been a change at every step of the way. I mean, daily things are changing. So, to keep on top of it, it's been quite the challenge, hasn't it?
It has, and especially when you've got a small business and things are changing. What is it that we need to keep on top of and know when you want to know how you're doing from month to month, from year to year? Management reports. That's what you need. And
Absolutely.
That's what we're going to be talking about today. It's a big subject, but what we'll be covering today, I'll just quickly go through that. Okay. So the first thing that we will be looking at is obviously, what are the management reports? The next slide we'll be looking at is how management reports now are documents and information from these reports that we're using for Jobkeeper. And lastly, and also we'll be looking at our basic tests and our alternative tests and how these reports will provide us with that information. Okay. So as I was saying, it's the management reports that are so important, not only to look at how you're doing, your profitability over the years, over the months that you've been trading, but this sort of information is now being used by the ATO to let you know whether you are able to go and apply for your Jobkeeper Extension 1, which starts from October to December, and Extension 2, which starts from January onwards. So what I'm finding is that a lot of people are a little bit unsure as to whether they're going to get the Jobkeeper, how it's going to affect them. And so I thought that we could use our management reports, talk a little bit about that, but also make it really pertinent for today. And what
Sounds great.
Yeah.
Because we really need to know the figures, because there are tiers within the Jobkeeper that you have to apply for. So you need to know whether you apply for the first tier and you're eligible, or whether you apply for the second tier, or whether you're eligible at all. So it's really important.
And an important date for everyone is the 31st of October. So by the 31st of October, you need to apply and see if you are eligible for the extension. So you've got 3 days, guys. So we're happy to make that application for you if you want. Just let us know. And these are the things that you need. Firstly, you need to know how well you did in the quarter that just went past. So that means the September quarter. That means, have you, when you're looking at your bookkeeping, have you reconciled all your accounts for this quarter? That just
Yeah.
went past. Have you got all your expenses and things like that as well? That's important for when you do your BASes. So actually, this period of time has really been unusual for us as bookkeepers, because if you want to do it correctly, if you want to do it right, you want to make sure that you capture all the information. And
Yes.
you don't want to be incorrectly putting down your sales, your GST turnover today, and then find out later on, oh, I missed this or I missed that. So what I have been doing personally for all of my clients is, even though we've got till the 25th of next month as bookkeepers to submit our BASes, I've been going ahead and finishing off the BASes for those who want to apply for Jobkeeper and those who have already got Jobkeeper. Get that out of the way so that you have your numbers done correctly. Because you don't want to just look at all your sales and say, all right, look, I've got my GST turnover figure because I've got all my sales, and then I'll do my expenses later. You don't want to do that. I think it's not wise to do that. You could do it if you're really short of time, but I say do it as soon as possible. And if you've got someone who is dedicated to making sure your accounts are done on time and so on, it shouldn't take so long. And also the ATO did tell us that they will be requiring this information from us. So we should have planned ahead.
Yes,
Okay?
absolutely. Absolutely. And again, you know, I think we stress at every webinar, put your data in on time. It's a matter of then running the reports at the end of the month or whenever you need them. And it's good data in, good data out. Remember that. If you're putting in incorrect stuff, then obviously the system's going to spit out incorrect information.
Yeah.
So it's really important.
Yes, so the first thing is, how do you figure out whether you can apply? Well, you look at the quarter. So if I can just share my screen again with you.
Sure.
So you've got the application that we need to put in. Obviously, I told you about that. We've got a basic test, and I think that most of us out there are just looking at the basic test. And what is this basic test? Well, what we're doing here is we are looking at all of your sales from the period of the 1st of July till the 30th of September, this year, 2020, and then we look at what you submitted in the same quarter of the year before.
Okay,
so
that's it.
Now you could go into your accounting package and look at what you had there, but if your numbers did not equal what you submitted, oh well, too bad, too sad. You know what I mean? So what you need to do is go and look at the BAS that you submitted. Maybe you made some changes to your accounts on your package. That doesn't matter. What matters is what you submitted. And the reason it does is because when you go in to do your application, it automatically populates those numbers for you from the previous quarter that you are comparing. So you look at your previous quarter, and then you look at what you will be submitting for your GST now, GST turnover for the September quarter. You put that in, and when you do, it will tell you automatically. You just submit, and it'll tell you you got it or you haven't. And it's based on 30% reduction. So you look at the total turnover on that date. You look at the total turnover now, and then you see if there was a 30%, the difference between the two. So you take the difference between the two and see if it was a 30% reduction. So you
Or
take
more.
the different or more. So you take the difference. So let's say you made, just for example's sakes, let's say that in that quarter you made 100,000. Okay.
Mm-hmm.
So you made 100,000 in that quarter, and then this quarter, let's say you made 70,000. Let's just say that. Okay. So
Easy.
what they do is that you take the 100,000, you minus the 70,000,
Mm-hmm.
right? And then you say, what is the difference? That's 30,000 divided by your initial quarter.
Mm-hmm.
That's your 100,000. And that will tell you what your percentage is. And if that was the case, then you are on the mark.
Yes, then you will definitely get Jobkeeper.
Yeah. But if you are slightly over, even by $1,000,
They won't
you're out.
automatically accept you. Absolutely. Yeah. And it's really hard because some of our businesses have been growing during this period. So even though we've had massive growth or we've had some growth, we're not 30% down. So, it's just unfortunate. And we just have to keep growing in that instance. We just have to keep working through it, and we won't get the additional or extended Jobkeeper.
Yeah.
But that's okay.
That's okay. So this, however, even though, we are saying that it's okay, a lot of small businesses who have counted on Jobkeeper, who are
Yes.
mainly sole traders, who mainly don't even have employees, they're the ones who are the most hard hit. So, so let me give you an example of a particular business that I look after. As a sole trader, this business owner was counting on the Jobkeeper coming in.
Mm-hmm.
His business had gone down. And because there was the Jobkeeper then, he was able to not only survive, but maybe was getting a few jobs here and there because other people who had Jobkeeper maybe had a little bit of income that they could spend to do odd jobs here and there. And so he was able to do better during this Jobkeeper towards the end of the period. When people start believing that things will ramp up, they think, all right, I'll do a little bit extra.
Yes, so there's confidence in the economy. There's confidence. People will happily spend when you're confident, won't you?
Yeah.
But if you don't think that there's money coming in, you're going to stop spending, or you'll just, I'll put that off for a little while. And then that's that knock-on effect, basically.
So he was down 28%.
And that's so hard,
28%. And there was no way that he could get that.
No, and it's really sad. I think there's going to be, there's a lot of businesses out there that are going to be in that exact position where we'll find the true impact in the next couple of months of what COVID has done for and against our businesses.
Yeah.
A lot of people have limped through or gotten through okay to this point. But now that they're paring back that assistance from the government and everything else, like, okay, we're starting to recover now, et cetera, et cetera. We're still in lockdown with 0 cases, but hey, it's all good. Don't start me on that. But yeah, I think that the true impact will be just starting to show itself in the next couple of months, and it's going to be a terribly tough time for everyone.
It is.
And that's where we all need to keep communicating with each other. Sarah, you're here for all of your clients and all the people who watch these webinars. Even if you just need somebody to have a chat to throw some ideas at, like, we're here to help. It's going to be tough.
Yeah, it's going to be tough. Now, the other example that I was going to give you is not exactly related to Jobkeeper, but I thought I'd just pop it in there, Joe, because we're having
Go
this
for it.
conversation. Why
Yeah.
not go for it?
Yeah.
We have
Yay.
another sole trader who was
Mhm.
so surprised because he has a business where he employs people and has been employing for the last year. And because he employs people, even though they're casual, and he gets his as a sole trader, he obviously has his income installment that he has to pay every quarter. He's actually getting a refund of $5,000 every quarter
Fantastic.
because he has employees. But really, he
I mean,
didn't expect it.
exactly. And, you know, they're the little wins. We've got to celebrate these wins. You know, there have been some really, really negative things that have happened, but, you know, there's little wins there. You know, he's getting 5K back. You know, that's 5K he hadn't planned on, and that 5K he can use to put money back into the economy, to expand his business, to maybe put a couple more casuals or whatever. You know, there's a lot of people out there looking for work. It's great. It's a really good incentive.
So he's doing well with that. And then I just put in the Basses for another business who obviously are struggling, and that 5K that they got means that they don't have to pay PAYG because they do have employees, and most of it was for paying the employees. So they're getting the Jobkeeper, they have their PAYG that they've got to pay as well, and the ATO is giving that PAYG back. So so they're really doing well, but I really feel for the person who is doing the right thing, got a 28% reduction, and it's a blanket no. But I want to talk to you about alternative tests, because a lot of people just believe that it's just a 30% standard test that you can have, and that's not the case. If we go to the ATO website, you will have an explanation of all the different types of alternative tests you've got. And the two tests that I'd like to talk about is if your business started after the comparison period. So we're looking at September 19. And so let's say you started a new business after September 19. However, you started it after September 19, but before the 1st of March 20. All right. So you should have started to be able to get Jobkeeper. Obviously, you needed to be registered, having started your business, providing services from the 1st of March 2020. So now if someone says, well, give me the quarter from ending 30th of September, you won't be able to do that. And so this would be one of the alternative tests that you can take. And how...
Yeah, that means that, you know, that the people aren't being penalised in any way if they've, you know, they don't fit to the regular criteria, because they weren't even operating last September quarter in 2019. So no, this is really good.
So they look at your monthly performance, and then they take the monthly, they multiply it by 3 for a quarter, and they look at that quarter to see how it is in comparison to the last quarter that we've had. Okay, so that's one of the examples. And then we've got other changes such as disposal of your business, or if you've restructured it, and so forth, if you've been affected by drought, or if there's an irregular turnover or something like that. But the next bit that I want to talk about is, has your business had a substantial increase in turnover? So let's say, and surprisingly, one of my so what we did for our clients who didn't qualify for the regular Jobkeeper is that we went to see if there's any other alternative tests that they would qualify under. And we found that one of our clients actually qualified under the alternative test, although they didn't qualify under the other test. So he was very surprised and very thankful that we went the extra effort to check for the alternative test. Because quite often out there, you just go, well, I don't qualify. Well, I guess that's it. But no, it's worth it to try and get someone to test these for you.
So how does that one specifically work? Because I know a lot of businesses, you know, my own included, doesn't qualify because there's been a substantial increase because my business is in a growth spurt, basically. You know, it's going from childhood to the pre-teens at the moment. So if your business has had a substantial increase in turnover, you can absolutely see it's just because your business is growing as it normally would have. You're getting more customers on board. They might not be spending as much as they intended to because of COVID. You know, the contracts might have reduced. They might have said, okay, instead of doing this, this, and this, I only want you to do this. So how do you qualify?
Oh, Jo, it looks like you're going to learn something else today.
I know. I'm so excited. You know, I'm going to get off here and get straight onto it.
You know, when I was putting this together, I thought, Jo's going to love it. She's going to go check.
I will investigate it because, you know what, if the government wants to help me out, I'm not one to say no.
Oh, no.
Don't ever look a gift horse in the mouth.
No, don't do that. Oh, that's funny. But, okay, so let's talk about how we are going to do that, guys.
Okay.
I'm going to share my screen again with you. And we're going to do the next test. So we need to check whether there was a 50% increase in the last 12 months. Okay, so you test the test June 2019 turnover and test June 20 turnover. So you're going to do within the next, how many? 12 months. You're going to check different periods. We're going to look at a 12-month period, a 6-month period, and a 3-month period as well. And then you'd be able to figure out whether you even qualify. Okay. So let's stop there. Now this is information that's available with the ATO, and so quite easy to go there and take a look. But let's go and explain a little bit further on how we have been able to do this for one of our clients. All right. So we are looking at the first test. So the criteria is, did your business grow significantly in the period before the 1st of March 2020 or in the period before the test, that is July to September? Okay. So we've got a couple of options. We have to check under each option. So what was your turnover so let's say we're looking at different possibilities where we might get a percentage decline and then we're eligible to apply. So did you get a reduction so what was your turnover in February? All right. So you find out what your turnover in February was, and then you test it with what was your growth in the 12 months since February 19. So February 19 to February 20. What was that growth? Right? And see, did you have a 50% growth? Because maybe in February 19, you started the business or way before, and you've just been doing so well till February 20, and then it went downhill. So maybe that was it. So that's one. The second thing is we look at the 6 months prior to February 20. So we look at August 19. We'll look at August 19 and just check the growth for the 6 months before and see if that qualifies. If you qualify, the question is, did you grow by greater than 25%? Then you can apply for the alternative test.
Okay.
And then the next one is the 3 months prior to February 20. So in November, how did you do in November? So now that once you look and say, oh, well, yes, I did grow in one of these periods, either 12 months, 6 months, or 3 months, then you can say, great, now I can apply. So now you apply the alternative test.
What's the, sorry, I'm taking notes. What's the percentage? So June 2019 to June 2020, it's 50%. Was it greater than 50%?
Yeah.
August 19 to February 20 is 25% if it was greater than 25. November 19 to February 20, what percentage?
12.5%.
12.5. I just thought I'd clarify that. Thank you.
Yeah.
Greater than 12.5. Excellent. Oh my goodness, I'm going to be doing my numbers when I get off this.
Do you want me to send you a sneaky spreadsheet there, Joe?
Oh, that would be fabulous. Thank you.
Okay.
If anyone else needs a spreadsheet, let Sarah know.
Well, I don't know about that. We'll have to see.
Have a chat with Sarah anyway. Sarah can organise something for you. But yeah, no, that's great. So that's really interesting, you know, because, you know, I looked at my numbers, I put it in the system, and under the basic test, it said, sorry, you're not eligible. I've gone, no problem. Okay, we'll get by. She'll be right. But you never know. I'm going to have a look at this.
You never know. And then you do the calculation, and there you go. You'll be able to figure that out. So come and talk to us if you want us to do an alternative test for you. And we'll be more than happy to do the alternative test. And what that will mean is that you could technically be throwing away, if you don't do this test, $1,200 if you are on the top tier for the next 12 weeks. That's 14,000. So you could be
a lot of money.
14,000. And I tell you something, Joe, we don't charge 14,000 for this test.
No, not even 10%, I'm sure. But seriously, it is it's absolutely worth it. You know, the government want us to kickstart the economy, want to keep going. They don't want it to slow down. So we're encouraged to take these tests and to see whether we qualify.
Yeah.
So let's do it. Let's do it.
And yeah, exactly. Let's do it. And this goes back roundabout to our first topic, which is management reports. And I want to know, if you didn't know and you weren't up to date with your BASs and you weren't up to date with how you were doing, what your GST turnover was, how are you going to be able to take advantage of all these alternative tests if you didn't know?
Exactly. And, you know, you've got to know your figures. You know, at any given time, you've got to know your figures. It's you.
Joe, I think I'll be talking to you right after this.
Oh, this is exciting. You know, well, you know, it's exciting. If we qualify, fantastic. If we don't, well, you know, that's okay too. You know, it's all good.
So
we'll get far.
We'll get that. So the alternative tests are definitely a possibility. And so I did apply for the alternative test for one of my businesses that I look after. And this specific one that I was talking about. And then what we need is to be able to then take all of that information and save it so that in case we get audited, we can easily explain how our numbers changed, why they changed, why we believe that they qualify. So it's so the basic test obviously is an actual But the alternative test, it's based on numbers that we already know. And really, if they did a test, they'd be able to find out. If they did the same test, they'll be able to find out whether we qualify or not. So because we would have been submitting a quarterly basis. If you are on a quarterly basis, if someone is as a was submitting annually, maybe not, they might come and ask you, but it's good to have this information. Okay. Absolutely. So that's the next thing. And finally, I guess what I wanted to say is, guys, it's, these reports, here with the ATO, we're looking at the sales figures, but it's not only the sales figures that your management reports, like your profit and loss, like your balance sheet and your cash flow statement. It is a good idea to compare them to previous quarters, to previous years, and to do an analysis of how you've been growing, or what percentage of a particular item is a percentage of sales, for example, so you can actually understand what a large or small chunk of your sales income goes into having that. For example, rent. If you were paying, a large percentage of your total sales in rent, then it is a real no-no. So what you should aim to do is look at your industry guidelines. They're available with the ATO online to see what percentage your particular size of business in the industry that you're in should be paying in rent. So if you're paying a lot more, then you should really consider whether that's the right thing for you to do. Are you doing the, so ideally, let's say for a business like a hospitality business, for example, about 7 to 9% of your total sales is what you should be paying for your rent, and that's about it. Okay.
And that's really different from the old school way of thinking, was 33% for your overheads, 33% for your cost of goods, and 33% for you, basically. So it's really interesting that that's changed, and you need to be on top of, because 6 to 7%, that's not a lot. And rents these days are quite expensive. So it's definitely worth knowing your figures.
So when you look at hospitality, for example, because this is the area that I was focused in before COVID, and hopefully after COVID, there'll be more opportunity in that segment. And yes, some businesses are doing okay because they have found innovative ways to work during this period. However, with a hospitality business, you're thinking about 28% your cost of goods. Then you're thinking, you've got to have employees, staffing costs, 30%, but really it's quite a little bit more than that. Even if you are so lean, you're putting in a lot. Hospitality uses staff a lot. So if you're innovative in, have you seen those places like in Japan where you just sit down and you place your order and the tray shows up with your food?
Fantastic.
I mean, how good is that?
I love Japanese innovation. It's great.
How good is that? You don't need to give that to a staff member who's then going to take, and then you're paying that staff member for that. This way you just punch it in. And nowadays you see a lot more of that, like I think at the plaza where you go in, you can actually put down on an iPad what your order is, and then just go and pick it up. So, hey, things like that are a lot more innovative. So staffing, and then obviously your operating cost would be the 30%, but out of operating, your rental is part of the operating. So,
Yeah.
you know, you have your electric, you have this, gas, da, 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 and all of your other costs, insurance and so on. So that makes up your other 30, and then you're left with very little at the bottom. So
Yeah.
what would be a good idea when you're doing your management reports is you look at all your costs in one quarter and you look at all your costs in another quarter, and remember to allocate them correctly. If you allocate your telephone one day to office expenses and on another month you put them to internet and telephone, but you had them in the wrong place, in the wrong area, then you're not comparing apples with apples. So you need to be really specific where you're putting your costs and what do you want to compare them with. And that is very important. For example, your cost of goods sold. You want to be able to, let's say you're a marketing company and you do a whole bunch of marketing in order to meet that sale for that particular client. So it's actually not marketing for you. It's marketing the client to achieve that goal, which is the sales figure, that what are the items that make up what creates the revenue that you take in. So you want that in the cost of goods, and you want to be able to check from month to month. Is this my cost of goods, or is it really my own expenses? Because your expenses of marketing are different from the cost of goods to produce the result you want. So every business has its own different cost of goods, and you want to be able to compare and allocate them correctly. So I would encourage going forward, now that you know that that even the ATO is looking at these, let's take a look at our own financials. Let's look at quarter by quarter, and I challenge you guys to let me know how you're going and whether you found that after the COVID period, or even between the first quarter of when COVID started, which is from April to June, then from June, you know, July to September, July to September, there were 2 quarters. Let's take a look at how you've reduced. How has your sales reduced or increased? And how have each one of your expenses increased or reduced? And this is quite easy in Xero. All you have to do is, when you do your profit and losses, make sure obviously you've allocated them correctly. Go to your profit and loss, look at comparing your reports. Are you taking notes down, Joe?
You know I am. Even though I did do it a couple of weeks ago, but it's like, it's always good to have a note about that. Yes, profit and loss, quarter compare.
Yeah, exactly. I love it, Joe. I love you. Just I give you a challenge, fellas. Let's see how we're doing with that. And until the next time that we meet, it will be the end of the calendar year. And hopefully all the restrictions will be down and we'll be singing. And I wonder if we'll have as much of a slowdown period from December to January that we usually do.
Probably not. I suspect that a lot of people will be just getting back into business and only taking the week off over Christmas.
Maybe.
Because, I mean, you know, construction will probably close its usual closure, but every other business is eager to get back up and running. So, you know, and it's not like we can travel overseas. We'll be lucky to be going interstate, I think. So, you know, we might have a shorter time off period. So let's see how the next year comes about. It's very exciting.
Exciting. Okay, guys. So thank you once again for joining us today for another episode of our free 10-part webinar series. It's always a joy to come up with the different ways that I can help you. Thank you.
Thanks, Sarah. Thanks, everyone. Bye.